Is it right time to invest in gold? How much return I got over a 5 to 6 years period in gold? Gold bond is better or gold mutual fund is better? For retail investors, the gold and fixed deposits are so close to their heart. Afterwards, this real estate. We know that because real estate is a big investment, that's why it takes slightly longer duration for people to get connected. But when you look at it, the percentage of investment in real estate is close to around 65%. How we have to look at gold investments? Is it I can look for 10% return, 15% return, 20% return? How much you can able to look at gold return on that? If you look at it a long term period of time, gold has given 10 plus return on that. It also that it has a taxation over and top of that. It's based on income tax slab. Though the Indians have different techniques to buy gold, but when you buy through straightforward methods, definitely we have to see how much return it's given over a period of time. Let you look at how the gold has behaved in the last 10 years period of time, then you know how much the returns have been varied over the period of time. In a 10-year period, in 2012, the gold price was around 3,650 that is for 10 grams, and then now currently it is 47,720. So in the last intervening period, it has gone up substantially. But in look at on a year-to-year basis, the gold has behaved slightly different. In 2012-13, it is negative 4%. In 13-14, it is minus 5%. In again 15-16, it's minus, and then it has moved again 8%, 5%, 5%, 12%. In 2019-20 it has given 38%, and 2021 it has given minus 1%. So gold doesn't give consistent return year on year. Although we believe it's equal to fixed instrument, it try to give a strong return. It doesn't give like that because gold doesn't have inherent strength over a period of time. Whenever the economy gets weakened up, the gold price goes up. When economy stabilizes, gold will get neutralized. And also the rupee to dollar also plays some role on the gold price. Why it is now, look at it, 2019-20, it has given 38% return. And technically, if you look at it, close to COVID, from 1st of March to August mid, if you look at it, gold has given solid 38% return on investments. So 38% on a gold, it's a great return. What happened? People will see immediately it has given good return. They went and pumped in the money to the gold. Those who chased the gold has got minus 2% return over last 6 months to 1 year period of time. So that technically shows you need, gold cannot be timed. Gold can be brought as an asset class over a period of time. Probably you can look for anywhere between 10 to 11% return. So that is where you need to play a good role in asset allocations. Commodities that runs on a cycle, you cannot predict precisely which point of cycle is a great to invest or not. Then when you look at it, the gold bonds advantage or mutual fund gold schemes are advantage. Probably the gold fund schemes could be advantageous because the government RBI releases the gold sovereign bond whenever they like it is there, whenever they feel it is a right time to invest it. So invariably the price changes quite faster. As for example, you look at it, August 2020, the gold bond, sovereign bond was sold at 5,300. And then now they are coming out 4,000. The last issue, it has been closed in January, it was around 4,700 odd. So technically that shows it has corrected. When you look at it slightly old, maybe 1 quarter, 2 quarter older than the August 2020, it was around 4,700 and odd. So that means from 1 year period 4,700, this 1 year is also 4,700. That means technically their price have not changed much. So when you are trying to buy, after seeing the rally is there, probably you should buy at higher price. Whenever you are buying at higher price, you need to wait quite longer period of time to offset the interest rates. That is why the gold bond slightly has a minus disadvantage when compared to gold fund, because we have to buy, you cannot time the market. Whenever it is getting opened up, you buy. But what is an advantage people talk about? It's 2.5% interest on the gold bond. It has been paid semi-annually or annually. But that is, although interest is taxable, although the capital appreciation on gold is exempted, but the interest component is taxed. You assume you are in 30% tax bracket, when you get a 2.5% return, the net return is 1.75% return. So the minus point at gold fund, you cannot time the market, because whenever it has been opened up, you have to invest. But the advantage of that, it is you get a interest rates at certain point in time. So when you compare on that particular angle, the one side is a minus about the rate, another side is advantage about the interest rate. The advantage of a gold bond is that if you hold for 8 years time, there is no taxation. But when you want to prematurely withdraw after 5 years time, as good as a gold fund scheme in a mutual fund, this also be taxed at the rate of 20% based on the indexation. So that is why if it is 5 years time, it's only the interest rates that gives an advantage on this. If you hold for 8 years time, the capital gains is a greater advantage on that. So when you buy, you decide whether you want to exit 5 years or 8 years time to make a distinction between sovereign gold bond versus gold scheme floated by mutual fund schemes. But a 5-year period of the gold bond, how it has given, and let's see the over a 10-year period of it as the bonds prices have given. When you look at the gold bond, that if you look at a 5-year period of time, the gold bond has given a 10% return. In November 2015, the gold price was 2,684, whereas in September 2021, the gold price is 4,300 and 4,752. That technically shows a 10% return is there. But when you compare over a 10-year period of time, how it has behaved, for example, the gold fund, you would have invested in Sensex fund. That given, assuming you have invested 12 lakh, the SIP, as you are investing on a monthly basis, you would invested 12 lakhs. At a maturity after the 10 year, the maturity value is 26 lakhs. That clearly shows 14.8% return on Sensex point to point. Whereas when you invested in a gold funds or similar period for a 10-year period from 2012 to 2022, you would have invested 12 lakhs over 120 months. The current value could have been 17 lakhs 5,000 rupees. Technically, it has given 6.83% return. Similarly, when you try to take Sensex 5-year return, Sensex 5-year return of gold fund, Sensex over a 5-year period has given close to 18% return. For the same period, gold fund has given 10.2%. When you compare gold fund technically with the Sensex, it has underperformed in the last 10 years time. When you take a gold as an asset class based on your asset allocation, assume an investor wants to invest, assume is in the age of between 35 and 40, he can have a 50-60% allocation to equity and 30% allocation to debt and 10% towards the gold. So in such asset allocation, we cannot look at technically of the returns. You also need to edge your inflation, edge your portfolio, so the gold plays a good role in trying to do that. Is it right time to invest or not? There is no right answer, because the gold doesn't, any asset class for that matter, you cannot time the market and invest. You need to stay invested over a period of time. So you want to know whether it's a good time or bad time, it is not about that. It's about how your mind is set. But always we suggest, as a financial planner, we always suggest that you need to have an asset allocation. So when you want to start investing in gold, start tomorrow, because last 1 year time is negative. When last year performance is always bad, subsequent year any asset class has given a good return. So when you look back the history, it's a good time to start investing in a gold fund. So with the next video, we'll see some other good topic. This is Suresh Parsadi, Certified Financial Planner and founder My Asset Consolidation, is signing off.